So in this trade of the week, we're going to go back to the basic recipe, but we will explore how easy it is to add to your winners with the top indicator. So adding to your winners is a difficult skill to master for various reasons, some technical and some psychological. The technical difficulties are easily overcome with the top indicator. In fact, it takes a decision for us, making it absolutely simple without the need of much knowledge of technical analysis. If the market is trending up and we get buy signals, we can add to our existing positions. If the market is trending down and we get sell signals, we can add to our short positions. The psychological reasons are a bit more difficult to deal with, but I will share with you a very simple guideline that helps you. Never add to a winner unless your trade is already risk-free. That way, the only risk you add is that of the new position, while your original trade is already either a winner or risk-free. If you don't do it this way, you will be adding not only to your positions, but to your stress levels. So let's take a look at our trade of the week. You may recall that Aldo had been announcing since Wednesday that the NQ was looking for a top, and he posted this chart with two possible targets identified by the horizontal red lines at 74.40 and 75.35. This was the chart he posted at the beginning of the week. On Friday, the market hit the second target and fell from there. So I was ready to sell, and in the expectation that it was supposed to be a large sell-off, which Aldo had announced as scary and dramatic, I was mentally ready to add to my position. When I came to the market, the first thing I noticed was that price had reached the level that Aldo had given as potential tops. That's where my horizontal line is. I typically mark those levels to keep a close watch. The second thing I saw was that while prices were going up, the MACD histogram had not gone up. In fact, it had started to come down. Notice that the very top in price was accompanied by a yellow bar in the MACD histogram, indicating that the histogram was about to change from purple to pink. That could have been a good sign to apply the DFTS first variation, but I was not going to try to trade the top because in his last update, Aldo was hesitant. So I waited for the DFTS basic recipe signal instead. As you can see, prices were already closing below the moving average, and the moving average was already turning down. With the expectation that the top Aldo had announced may have been reached, I moved to my trigger chart without waiting to see more of a downslope in the moving average. I figured this was confirmation enough. Prices were obviously coming down in the trigger chart, and all I had to do was to wait for another sell signal. But that didn't happen until an hour later. That's the boring part of this profession. Sometimes we have to wait, and then the trade is not even a winner. But the truth of the matter is that patience pays in the end. When I finally got the flag, the SAR and all the components of the top India aligned, I placed my sell order with 3 contracts at 74.64 with a stop at 74.89. I didn't want to risk missing this trade after waiting for so long, especially with the potential we were expecting it to have. So I placed my order at the same level as the opening of the bar. I thought I had missed it anyway because an entire bar formed without filling my order. It was difficult to wait just hoping prices were going to come back to my order and fill it. But long ago I learned not to ever chase any trade. Anyway, I was filled in the next bar, only 5 minutes of stress. Once my order was filled, I immediately placed an order to exit 1 contract 2 points below at 74.62. That order was rapidly filled, and I lowered 1 stop with the SAR to 74.8750, and the next stop I lowered 2 points above my entry as I taught you in a previous lesson. Very soon I was able to lower one of my stops to break even, and the second one with the SAR to 74.7325. The reason why I was able to lower my stop to break even is because the moving average was already trading 2 points below my entry, and I was able to start trailing this stop with the moving average. At this point, I realized how lucky I was, and it wasn't because the trade was going in my favor. You see, instead of using a buy stop as my stop, I had placed a sell stop by mistake. I was just lucky that while trailing the stop, I realized my error and was able to fix it. Now the trade was completely free. One stop was at 74.6125, and the second was 2 points above the moving average at 74.5875. At this point, one of my stops was at 74.49, which locked in a very nice profit already. And the other was 2 points above the moving average at 74.5150. The SAR was very close to the top of the bar, so I thought I was about to be stopped out. But it didn't stop me out right there. Instead, I was able to lower my stop to 74.4575. The next bar stopped one of my contracts with almost 20 points of profit. The third contract was still at 74.5150 because the moving average was no longer moving down, and so I could not move my stop lower. Now here is where something really cool happened. My trade was not only risk-free, but it was already a winner. Even if my last contract was stopped out, I would still come out with profits. But most importantly, now I have the opportunity to add to a winner, and the way to do that was very easy. The top indicator was giving me another sell signal. Everything was already present. I didn't even have to wait for the flag because the moving average had not changed to green. So I placed an order to add 2 more contracts. That way I could keep my trade unit at 3, which is something I'm psychologically used to in the trade. If I were to add 3 more contracts or even more, then my trading unit would suddenly be 4 or more contracts, and that would likely affect my thinking negatively. And with my thinking out the window, so would be all my trading decisions. My order was filled at 74.2850, making my average entry now at 74.5025. I placed my stops at the level of the SAR. Also, I placed my buy order 2 points below as my first target for this position, which was achieved very quickly. And now I had 2 stops again, one at the level of the SAR and the other 2 points above the moving average. On this chart, you can see that my trade kept moving down and my 2 stops are now at the same level. The profits show $2,000+, which is very exciting for one short-term trade. And now, a short time later, I was able to move my stops even lower, one to 74.0950 with the SAR, and the second to 74.1650 with the moving average. Notice here how close it was to having the market stop out at least one of my positions. My stops were at 74.0375 and 74.1225. As expected, one of my positions was stopped out. The second is still in with a stop at 74.0875. But notice that I'm having again the possibility to add to my trade. The trade is a winner. It is risk-free, and if I were stopped out, I would still end up with a winner. All I had to do was to wait for the SAR to change from below the bar to above the bar. All the other elements and components of the trade signals were already present. But the SAR didn't change as expected. Instead, I was stopped out with a total of $2,085 in profits. So I hope you enjoyed watching this trade, and I do hope it helps you learn how to add to your positions. Till next time.